Alright, good day everybody. Hope this video finds you great. Hope it finds you guys well. This is take two. I don't know why, but what ended up happening is I guess I recorded a session. I thought it said it was recording and started it and went to go upload it and do some editing to upload it for you guys, and for some reason wasn't showing up. So I don't know if it was a technical error on me or it just refused to show up. But anyway, let's hop into it. What I basically want to do is give you a quick overview of the portfolio. It's around $385,000 now, which is really exciting. That's obviously due to some additional capital contributions to the portfolio and also the market holding in strong there. And then after that, I want to walk into the M1 finance portion of the portfolio, which is the main thing I really want to cover today. For those of you that are new to the channel, hi, I'm Matt. I manage about $385,000. And if you're interested in following that, feel free to hit that subscribe button. I talk about this about every week or so. I release a video and talk and interview people and a whole bunch of other stuff that I find interesting, and talk about dividends and the cash flow that comes from the portfolio. So if that's something you're interested in, feel free to hit that subscribe button. About 58% of you guys aren't currently subscribed, and I'd love to see you guys in the comment section building the community. So getting back to the portfolio, like I mentioned, 385,000 or so, 260,000 of which, or just under two-thirds, or just over two-thirds rather, of the portfolio is in dividend individual stocks that I purchased throughout the past 6 or 7 years or so. And that, if I scroll into here, in the next 12 months or so, would generate just under $11,400 in dividend income, which is phenomenal. It's a lot of good cash, a moolah coming from the portfolio. That gets me to a dividend yield of around 4 to 4.5%. On a monthly basis, that spits out just under $950 monthly. So that's pretty cool. That's just without any dividend reinvestment or anything like that, or dividend growth coming from the portfolio. There is an interesting one that I was kind of thinking about earlier. Is AT&T actually raised their dividend yesterday, or maybe it was on the 13th, which was Friday, actually. And it has yet to automatically come into the portfolio here. So I'm going to do a quick timer, keep watching my watch here, and find out when it actually hits the portfolio, because I've seen the dividend raises be automated in this tracker already, but haven't really watched it or given it certainty. I've kind of just let it go. So I'm waiting to see when it actually falls through. But cool, interesting tidbit about the AT&T portion of the portfolio of around 220 shares or so. So the 4-cent annual increase, or one share or 1 penny per quarter increase that they're giving from 51 cents to 52 cents, means the annual dividend goes from $2.04 to $2.08, which is cool, 4 cents a year increase. But when you own about 200 or so shares, 220 shares for me to be exact, gets you just under $9 a year in terms of annual increase, which is awesome, because I didn't really do anything other than own the position and take cash flow from the business, which is pretty cool. Another $9, it's just under 75 cents a month that I can expect an increase, which isn't a lot, but you start thinking about the 40 or so positions that I have. If every one of those do that every single year, sometimes more than 2% increases that you're seeing. Most of the time they are. Generally, it's like 6 to 8% that I see, which is about 4 times the amount that I would see from AT&T. Ends up being a good chunk of change. Ends up being a couple $100 in terms of just dividend increases, and then thinking about the actual reinvestment. But anyway, before I get down that sort of rat hole, love this because it kind of gives you an overview as to how everything's going. Of course, I'm still way over diversified into energy, financials, and real estate, which is this yellow, orangish, and reddish, as you can see, in terms of dividends. And it's the same for the actual value as well. But other things are catching up as well in terms of value. So consumer staples is just under 10% in terms of value. Healthcare is catching up because of a large position in AbbVie. And so it's really starting to even out. It's really just these three large ones here that are really causing the under allocation to the other sectors, like industrials, information technology, materials, telecom, stuff like that. Telecom, I think, is actually okay, 7%. Can't complain with that. That's 7% dividends as well. But yes, as you can see, average yield by sector is also here. So if you're interested in seeing that, managing your portfolio this way, check out the link in the description below. Give you guys about a 45-minute or so video if you're interested in making one of these on your own, or we have the downloadable link for you guys where it's automatic. Just over $1,200 expected for the month of December. Let me zoom in here so we can get a better view, and then we'll move on to M1 Finance. So like I mentioned, just over $1,200 expected, just under $9,000 for the year, which is pretty nice. The goal, I'll get into that in a little bit, was $8,500. So we're up on the goal, which actually ended up making me increase my 2020 goal, which I talked about a little bit ago. But Bryn Mawr Trust paid me about $50, which is nice. Johnson & Johnson and both or multiple of my accounts, $69. 3M, $69 as well, which is pretty interesting. Realty Income Corp, it's going to be the last $5 payment that I get because it goes up to $11 next month, because I invested a couple more dollars into Realty Income Corp, just because I had some stale money and I wanted to buy something. Phillips 66 up to $39 a quarter, which is awesome. Wells Fargo's up to $112 a quarter, which I'm pretty excited about. Once again, in the M1 Finance account, which we'll talk about in a second as well, $20 coming from Johnson & Johnson, $25 coming from 3M, $1 coming from Visa. I wasn't expecting a dividend payment from Visa this quarter or even this year, so I'm pretty excited to see just even $1 kind of coming in to the portfolio. Cardone Capital paid me again $56.25. It gets me $281 for the year, which is pretty nice. I thought it would be a little bit more, but we'll see what happens in the future. And then $7 coming from my personal savings Amex account. $113 from Amex for the year, which is pretty cool. But yeah, totaling, there's still a couple companies, obviously, which need to fill out the rest of the year, and we'll obviously have my December roll up and probably year roll up, where we kind of discuss the biggest dividend pairs for the year for me. But at the moment, we're kind of forecasting around 1,200, which will be the second largest month for the year, behind September. So that's pretty cool. September and March are generally my bigger months. So that's because a lot of semi-annual pairs end up paying me in March. So December will be the second biggest month for the year, $1,200. I wish all of my months were $1,200, but that averages out. If you kind of look at these three, it's around $900 or so a year, or $900 a month or so if you average, say, the last 3 months of the year, which is pretty awesome. Comparing that to actual goals, you can see kind of the dividend progress that we're kind of looking at here. Got to the $9,000 or so range here in 2019. This is kind of what we're forecasting at the moment, but the hope is we'll get this to about 14,000, which will change the shape of this curve a little bit. Actually, if I just scrolled over a little bit, you could actually see more of what the portfolio is wanting to kind of look like, but you can kind of see it kind of levels off and then goes down because of the values aren't really in there, but really trying our best to get there. Income goal was $8,525 for 2019. We're at $8,980. So just under 9,000, which is awesome. 58% year over year increase. And if you actually add in the YouTube income that I got, it's just under $10,600 for the year, which is pretty astonishing. The actual income from dividends was around $750, which is pretty cool. So that means at the moment we're looking for 2020, without any additional capital being added, to increase that by about $200 a month, which is pretty sweet. Then if you add in the YouTube income, it gets us to about $882 a month, which is pretty cool. Can't complain with that at all. Then again, moving that to 2020, even before we enter 2020, we're already up 27% just based off the fact of the capital that I've been adding throughout this year. And next year we'll have 4 quarters worth of all the dividend paying stocks that I've been purchasing. So obviously companies like Visa, 3M, and Johnson & Johnson in my M1 account, which we'll discuss in a minute, invested in those in September, and so I was only actually able to get one dividend payment out of all 3 of those positions. That's $7,000 or so, close to $7,000 worth of investment. Next year I'll be able to get 4 quarters worth of dividend payments from all 3 of those companies. So just from that alone, I'll be able to get 3 additional payments from each of them, essentially quadrupling the amount of income I get from the M1 Finance portion of the portfolio that I got this year. And so, if you actually look at that kind of in numbers form, we were fortunate enough to get about $46 or so this year in M1 Finance income. We'll get into this a little bit in a second. But full year next year, 2020, we'll be looking at $187, and that's without the additional $250 a month or so that I generally add in. So let me log back in real quick, and we'll get into M1 Finance. So yeah, this is the M1 Finance aspect of the portfolio, just under $6,800, close to $7,000 or so. 3 positions: Johnson & Johnson, 3M, and Visa, just like Konuk we talked about a second ago. All of which kind of allotting to a third position for Johnson & Johnson, 3M, and Visa, respectively. Started off the positions in about the September timeframe. I initially funded the portfolio with $500 back in June or July, then another $5,000 or so in August or something like that. And then I finally made the decision to pull the trigger and buy something, which ended up being Johnson & Johnson and 3M. And so I did a 50-50 position split with those. Decided that I wanted to diversify a little bit into Visa. So when I started off at Visa, didn't have any positions. I was just going to add $250 a month just to automate a little bit. And so far we're up to about a 12.1% portion of the 3M aspect of the portfolio, which is obviously slightly off. But the cool thing I like about this at the moment is I just showed you guys that I got paid dividends. Those dividends were reinvested into Visa. Let's take a quick look as to what I'm talking about here. So 3M actually paid me just under $25 or so in terms of dividends. That actually went into purchasing more shares of Visa rather than actually going back into 3M, which is kind of cool. And then Johnson & Johnson did the same, just over $20, which then went into purchasing actual shares in Visa, and this actually ended up being 21.22 because of the 85 cents that I luckily got from Visa dividends, which I wasn't expecting to get a Visa dividend at all, so pleasantly surprised there. But as I was kind of alluding to you guys earlier, funded the account between July and August or so, and then I actually started trading in September with the first original purchases of 3M and Johnson & Johnson. So at the moment, looking pretty cool. Up 9%, which is pretty awesome, adding about $250 a month or so into the portfolio. I've only put $250 into Visa 3 times, so this is a $750 investment. It's already up about $75 if you look at it that way. Portion of that obviously is dividends, and a portion of this obviously is also capital gains. But it's pretty interesting to see, and that's one of the benefits of utilizing an M1 Finance portfolio. So I'm hoping to get this up to, just over $3,000 or so, and then kind of get it to a more reasonable of a position. And luckily, I'll be able to utilize Johnson & Johnson's 3M's dividends to get me a little bit extra month or so's amount of dividends, month or so's amount of capital appreciation, or capital contribution rather, the $250 a month back into Visa next year, because we're looking at about $180, $190 at the moment. And of course, if I continue to add to the portfolio, Visa's dividends as well will be able to help us. But this is kind of cool. I really like M1 Finance. It's a very small position in the portfolio in terms of total size. I think it's a little bit less than 3%. If I were to calculate the total amount, obviously, when I say 3%, I'm really only counting the 260 or so thousand portion of the dividend portfolio, not the 385,000. Otherwise, this would be less than 2%. But I like this because it gives me an opportunity to kind of see how a different platform works if I wanted to go more gung-ho with it. And it also allows me to diversify out of Fidelity. Not that I see any lack of security or any reasons to be concerned about Fidelity, but it's just a nice place to throw additional capital, say $250 a month like I'm doing right now, and I'll still be investing my $1,500 a month in my normal brokerage account in Fidelity, and I also do the $150 or so in Fundrise every single month. And then, of course, I do my normal 401k contributions as well. So, but it's just really allowing me to look at something a little bit differently, and see what kind of investment accounts are out there, where other places or other companies might go to if they really enjoy what, say, M1 is doing, just like what people really enjoyed what Robinhood was doing. All these companies now have zero transaction fees, which is pretty interesting stuff. So, some of you guys might get heated and say, "Why do you only have three positions in your M1 finance portfolio?" The good thing about M1 is that you can do fractional shares. You can purchase, any amount of stock that you want just with $10. You could put $10 into Amazon. You could put $10 in, and the reason why is because, generally speaking, at this point in my investing career, $260,000, or say 385, however you want to look at it. At that point, if I wanted to only invest like $1,000 in every position, that would mean I have 265 or 385 positions. And at that point, it'd just be worthwhile me buying an ETF. And so the way I look at it is this gives me a little bit more control. Whether that's right or wrong, is left to be seen. But the way I look at it is a position really doesn't really matter to me unless it's, in the order of $3,000 to $5,000, and some of them at the moment are now up to $10,000 to $15,000 in terms of the size of some of the positions that I have in the portfolio. And so, only investing, let's say, $1,000, unless I'm building it, kind of like my Visa position here, doesn't really make a lot of sense. And so, um, the position here is only, just under $7,000, so it makes sense why I only have really three positions. And if I really wanted to do some heavy diversification, at that point I would just do an ETF, S&P 500, small cap 600, total investment fund or total stock market fund, ITOT, or something like that. Um, but I don't. There's select companies that I really enjoy. I really like the Johnson and Johnsons and 3Ms of the world, and I also like to diversify a little bit into Visa, which is a higher growth stock, but it's also growing the dividend at a blastingly fast rate as well. Similar with Mastercard, great business models. Really hit the ball out of the park with that one. In terms of a business model. So, anyway, rambling on here a little bit. If any of you guys are interested in M1 Finance, feel free to find my pie down in the description. Of course, you can sign up. We both get a little bit of a benefit there. I don't remember exactly what it is. But also, if you want to learn how to make the uh, portfolio tracker here, like I was showing you guys, there's a link in the description as well. Feel free to give that a look. It's about a 45-minute video if you want to learn how to make it on your own, or you could just purchase it for a small price and have it, so you can focus on the things that really matter, like where you're actually putting your money into, what sort of yield you're getting from each particular sector, are you over allocated to certain sectors, and really kind of allows you to take a step back as to what is in your portfolio, and is that what you actually thought, and actually managing it, rather than just kind of checking specific dividends and this and that. This really has allowed me to focus on managing a portfolio rather than tracking a portfolio. Really cool, automated, keeps track of your dividends, and allows you to check up and keep track of everything in one simple little place. This has really changed the way I invest personally, so hopefully it does the same for you. But anyway, otherwise, if you guys haven't subscribed already, please subscribe. 58% of you, I guess, at the moment aren't subscribed, because I know that they're trying to show my content to other people to see if they're interested. So if you are, hit that subscribe button. If you have any questions or comments, leave them down in the comment section down below. Love to answer your guys' comments. I think that's one of the things that I try to do best. Hopefully this video finds you guys great. Hope it finds you guys well. Hopefully it actually recorded this time, and I will see you guys on the next video. Cheers.